If I have $600,000 saved in my retirement nest egg, I'm a single person, how long will my savings last when I retire? So we're going to explore this topic and more, so stay tuned for the full episode. Welcome back. This is Richard with Wisdom Investor. We've got some good information we want to share with you here today. Now, on this channel, we explore Social Security, investing for retirement, saving for retirement, when to retire, and much more. Now, in this example here today, the person has $600,000 in their nest egg saved for retirement. You would think that is plenty for retirement. However, it is very easy to outspend your savings. So it's very important that we make it last a lifetime. Okay, here's our situation here. This is example number 1. We're going to look at 2 different examples here. How long will my money last in retirement? I have $600,000 savings. I'm a single person. We're going to retire at age 62. We're estimating longevity to age 87. That's 25 years in retirement. Now, the first thing we need to do when we're trying to determine if our $600,000 is going to last a lifetime, we need to look at our cost of living. How much are expenses in retirement? Each one of us needs to sit down and determine what our living costs are going to be. In this example here today, we're estimating our monthly living for a single person is $4,000 per month. That's $48,000 per year in expenses. After we determine our expenses, we now want to take a look at other income that we might have. In this example, we have Social Security retirement benefit of $1,400 per month. Keep in mind, they're retiring at age 62. A person could also have a pension or other income coming in, but in this example, we're only showing Social Security retirement benefit, increasing at 2.2% per year. That's the average COLA amount over a 20-year period. For those who are not aware, if you take Social Security at 62 and your full retirement age, for example, is 67, you're going to receive 30% less benefit. So you want to keep that in mind. In today's example, the person is retiring at 62 and their Social Security amount in this case is $1,400 per month. We have $4,000 per month living costs, $48,000 per year in expenses, $1,400 per month income coming in. This leaves a balance of $2,600 per month that we're going to have to withdraw from our $600,000 savings. We're going to bump that up to $3,000 per month withdrawal due to unexpected expenses that can come up. Also, the $3,000 per month withdrawal from savings will be adjusted annually for 3% inflation. Normally, I would use 2%, but with the inflation that we have right now, I'm going to bump it up to 3% right now. And then we're going to use the Calc XML to calculate our results. Now, before we look at our calculations, here's a chart I want you to take a look at. How long will my $600,000 savings last at different rates of return if I am single? Now we have 4 different columns here. We have 2% yield, 4% yield, 6% yield, and 8% yield. When we say yield, that's the return on your money, whether it's sitting in the bank earning interest or it's invested in the stock market or bond market. In the 2% yield category here, you can see the $600,000. If you withdrew $2,400 per month, that would last 27.1 years. Now, if our expenses are $3,000 per month, that's going to be a little short. So we'd have to draw a higher amount, but we're not going to be able to do it with the 2% yield. We'd have to get a higher yield. Now, if we go over here to the 6% yield, we can go down here. We can see that $3,600 per month withdrawn would last 30 years if we were earning 6% on our money. If we were earning 8%, the $3,600 per month would actually last forever in this case. You could withdraw up to $4,000 per month, and that would last you 22.6 years. As I said, the yield is the total return on the investments, interest, dividends, net asset value increase, etc. Now, where do you get a 6 or 8% return? You can invest in a good diversified index fund, for example. These are examples. We're not focusing on where you're investing this. I'm just using some examples here. For example, Vanguard Wealthy Income Fund over the last 10 years averaged 6.01%. Schwab U.S. Large Company Value ETF over the last 10 years averaged 10.57%. Keep in mind, there's no guarantee of future results. The other thing I wanted to mention, there is and can be taxes in retirement. Now, we've calculated the taxes in this situation into our monthly expenses, but you want to be aware of your taxes. Now, the $600,000 that we're talking about, if that is in a 401k or an IRA and you're withdrawing that and it's a taxable transaction, there may be a taxable amount due on that. Also, Social Security is combined with your income, and so there could be some kind of a tax on that too. But we're not going to get into all the details on that here today. I just wanted to cover this briefly. Also, when we talk about taxes, there could be required minimum distributions. Now, and here's an example of $500,000. And this is what required minimum distributions would look like. They start at age 72. So in this case, it would be almost $20,000 beginning in 72 that you would have to withdraw from your IRA or 401k. You're going to want to seek a tax consultant or CPA to get the exact numbers in your case. In this case, we're withdrawing $3,000 per month. That's $36,000 per year. And that's pretty much going to cover the required minimum distributions. You can see here at the top, $35,000 per year. That's at age 92. So in this case, we should be covered and shouldn't have to make any extra required minimum distribution. Let's take a look at how long our $600,000 is going to last in this particular situation. Example number one. If the person put their money in the bank, they didn't want to invest. Now, a lot of people, when they get to retirement age, they don't want to take any risk. In this case, we're just going to put it in the bank, earn 1% on our money. The $600,000 is going to last 23 years. Now, we need to get that money to last 25 years. So in this case, they may either need to decrease the amount of their withdrawals or do something that would increase their investment return. Now let's take a look at if we earned 3%, we had our money invested in stocks and bonds, the $600,000 is going to last 28 plus years. On this chart here, we can see the amount saved is on the left-hand column with $600,000 at the top. And then on the bottom here is the years our money needs to last, or will last in this case. And you can see it's out to 28 years. Now, it doesn't mean a person can't invest more aggressively. And of course, their money would last much longer if they had a higher rate of return. But the main thing I wanted to show is you want to have a 3% investment return in this situation so your money would last the required 25 years. Of course, we never know how long we're going to live. Maybe we only live 20 years in retirement. Maybe we live 30 to 40 years in retirement. Let's take a look at example number 2 in this case. Again, retirement. At age 62, 25 years in retirement, we're estimating. Cost of living in this case is $6,000 per month, $72,000 per year. Expenses. The Social Security amount is still the $1,400 per month. This leaves a balance of $4,600 that needs to be withdrawn from the $600,000 in savings. We're going to increase it a little bit so that we're withdrawing $5,000 per month due to unexpected expenses, and it's adjusted annually for 3% inflation. Here's our results in this situation. Example number 2. If you're earning 1% in the bank, the $600,000 is going to last 13 years. That's not long enough. We need to get the money to last 25 years. Earning 4% investment, either in stocks or bonds, the $600,000 will last 16 years. We're still short 9 years. Earning 6% investment, the $600,000 will last 18 years, and we're still 7 years short. Keep in mind, in this case, we're withdrawing $5,000 per month. In example number 1, we were only withdrawing $3,000. So it's going to take a larger return on our money to make the money last a lifetime. Here's how it works out for our single person here with $600,000 nest egg. They would need a 9% investment return, and their $600,000 would last them for 27 years. You can see on the chart here, the $600,000 is going to go all the way out almost to 28 years. One other way this single person's retirement nest egg could be extended over a lifetime is if they spend less money. Now keep in mind, many people as they get older, they actually spend less money. So that might also help this person's retirement nest egg to be extended over a longer period of time. The first thing we need to do is do a good job of saving for retirement. Once we get close to retirement, then we can start looking at how much money we've saved. Then we need to take a look at our expenses. We need to subtract our expenses from what we think our income is going to be. And this would give us the amount that we might have to withdraw from our savings. So I hope this information was useful here for you today. Thanks for watching. Stay tuned for our next episode.